Hi, I'm Natacha with Fierce HR. I want to dive into something I bet we don't talk enough about in boardrooms: employee morale and NPS scores. Now I get it. Most of the time, we focus on the hard metrics like revenue and EBITDA. But the truth is, how your people feel is directly tied to those results. Your employees drive your success, and when they're not engaged, everything is impacted. I'm glad to share reasons why venture capitalists and private equity firms should care about these metrics. Let's start with the big picture. Employee morale and NPS scores are leading indicators of your company's health. You might look at your executive team's stability and think that's enough. But if you're facing high turnover and disengaged employees, that's a red flag for deeper instability. If you're a venture capital, you know that rapid growth depends on having an engaged workforce. If your employees aren't fully invested, growth slows down. For private equity, morale problems create inefficiencies that undermine the operational stability you're aiming for. Don't gloss over your eNPS score. If it's low, be transparent, but also lay out your plan for improvement. Morale isn't just a feel-good metric, it's a critical indicator of future performance. Investors want to know you're not only aware of the problem, but actively working to address it. The second reason? It's more than just a people problem. It's a business risk. Each person who leaves takes their skills and institutional knowledge with them. And with every departure, you're spending money on recruitment, training, and lost productivity. This isn't just disruptive, it's expensive. For venture capitalists, you can't scale efficiently if you're constantly replacing people. For private equity firms, turnover creates operational drag, which eats away at your profit margins. When you're talking to investors, emphasize your retention strategy. It's about creating an environment where your best people want to stay. Third point, low morale directly impacts productivity, and that means it hits your bottom line. Disengaged employees simply aren't producing at the same level as those who are invested in the company's mission. Low morale can lead to a toxic culture, tough to reverse. Tie your revenue projections to employee engagement. Next up, investors hate surprises, and low morale, it's a hidden cost waiting to surface. When employees are disengaged, it might not show up immediately in your financials, but eventually you'll feel it in high turnover, low productivity, and declining customer satisfaction. Disengaged employees mean your team isn't innovating or pushing the business forward. Be upfront with your investors. If there are issues, don't sweep them under the rug. Finally, long-term success is only possible when you have a healthy workforce. If investors looking for a quick exit or a long-term play, your people are your greatest asset. High NPS scores are a sign of a team that's motivated, engaged, and ready to drive your company's goals forward. Making your company attractive is an investment. Make employee morale part of your investment story.